Listen to me very carefully. What I'm about to tell you could save you decades of financial struggle. I'm going to show you the exact behaviors that are keeping you poor. Not the obvious ones, the hidden ones. The ones you don't even realize are destroying your financial future while you think you're being smart. I've watched people make these mistakes for years. Intelligent people, hard-working people, people who deserve better but keep sabotaging themselves without knowing it. And the most painful part? Most of them will never realize what they're doing wrong. They'll work their entire lives, retire with almost nothing, and wonder what happened. That doesn't have to be you. If you watch this until the end and actually apply what I'm saying, you will be different. You will see money differently, you will act differently, and you will end up somewhere completely different than where you're headed right now. Pay attention to every word. Stop chasing get-rich-quick schemes. The first thing you need to stop immediately is believing that wealth happens fast. This belief is poisoning your financial future right now, and you might not even know it. I see it everywhere. People jumping from opportunity to opportunity, crypto this week, startup next month, day trading after that, always looking for the big score, always waiting for the one thing that will change everything overnight. Let me tell you what actually happens to these people. They spend years chasing. They lose money on scheme after scheme. They miss the boring opportunities that actually work. And 10 years later, they have nothing. Sometimes less than nothing. Sometimes debt. Meanwhile, the person who invested consistently in simple index funds, boring as it sounds, has built real wealth. Not exciting wealth, not Instagram-worthy wealth, but actual money that exists in actual accounts. I fell into this trap myself. I spent 2 years of my life looking for shortcuts. I tried everything, every new opportunity, every hot investment, every promise of fast returns. Do you know what I had at the end of those 2 years? Less money than when I started, and lost time I can never get back. The turning point came when I met an older man who was genuinely wealthy. Not flashy wealthy, quietly wealthy. I asked him his secret. He laughed and said there was no secret. He had invested the same amount every single month for 35 years. That's it. No tricks, no schemes, just consistency over time. Here's what I need you to understand. Slow wealth is the only real wealth. Fast money almost always becomes fast losses. The boring approach works. The exciting approach almost never does. Every minute you spend looking for shortcuts is a minute you're not building something real. Stop chasing. Start building. The tortoise beats the hare. This is not just a children's story. This is financial law. Stop waiting to start. The second thing killing your financial future is waiting. Waiting for the right moment. Waiting until you earn more. Waiting until you know more. Waiting until conditions are perfect. Conditions are never perfect. The right moment doesn't exist. And every day you wait is a day your money could have been growing but wasn't. Let me show you some math that should terrify you. If you invest $200 per month starting at age 25 and you earn an average return of 8%, by age 65 you'll have approximately $600,000. If you wait until age 35 to start, investing the same amount with the same return, by age 65 you'll have approximately $270,000. That 10-year delay cost you $330,000, not because you invested less monthly, because you started later. Time is the most powerful force in wealth building, and you're wasting it. I talk to young people all the time who say they'll start investing when they earn more. This is backwards thinking. You should start now with whatever you have, even if it's tiny. $20 a month, $50 a month, something. Why? Because the habit matters more than the amount when you're starting. Because you need to learn how investing feels before you have large sums at risk. Because the clock is ticking, and every month you delay makes your future harder. I started investing with amounts so small I was embarrassed to tell anyone, but I started. And those tiny amounts, invested consistently over years, became something meaningful. If I had waited until I could invest real money, I would have lost years of compounding that I can never recover. The best time to start investing was 10 years ago. The second best time is today. Not tomorrow, not next month, not when you feel ready. Today. Stop letting fear control your money. Here's something that might be uncomfortable to hear. Your fear is making you poor. The caution you think is protecting you is actually destroying your future. I see people hoarding cash like it's precious, keeping everything in savings accounts, refusing to invest because the market is risky, feeling safe because they can see their money sitting there, not moving. Do you know what's actually happening to that money? It's dying every single year. Inflation is eating your cash. If inflation is 3% and your savings account pays 1%, you're losing 2% of your purchasing power every year. That's not safety. That's guaranteed loss, slow loss, invisible loss, but real loss. The money you think you're protecting is being destroyed while you watch. You just can't see it happening because the number in your account stays the same, but that number buys less every single year. I understand where this fear comes from. For many people, it was taught by parents. Your parents grew up in different times. Maybe they lost money in some disaster. Maybe they never understood investing. Maybe they passed their fear to you like an inheritance you never asked for. But here's the truth. Keeping all your money in cash is not safe. It's risky. It guarantees you'll have less purchasing power over time. The stock market goes up and down, yes. But over any 20-year period in history, it has gone up. Cash has gone down in real terms over every 20-year period because of inflation. I'm not saying put everything in stocks tomorrow. I'm saying your fear is not rational. It's emotional. And emotional financial decisions almost always lead to poor outcomes. Stop inheriting bad money beliefs. This connects to something deeper that most people never examine. Your beliefs about money were installed in you before you could think critically. And many of those beliefs are wrong. Think about how you learned about money. Did your parents sit you down and teach you investing? Did they explain compound interest? Did they model wealth-building behavior? For most people, the answer is no. Most people learned about money through observation. They watched their parents stress about bills. They heard phrases like, money doesn't grow on trees, or we can't afford that, or rich people are greedy. They absorbed a fear-based, scarcity-based relationship with money without ever choosing it consciously. I grew up believing that wanting money was somehow shameful, that being satisfied with little was virtuous, that investing was gambling, that debt was always evil. These beliefs felt true because I had heard them my entire childhood, but they weren't true. They were just inherited. Here's what I want you to do. Write down your beliefs about money, all of them. Then ask yourself, where did this belief come from? Is there evidence it's actually true? Is this belief helping me or hurting me? Many people discover that their strongest financial beliefs have no basis in reality. They're just echoes of things their parents said, which were echoes of things their grandparents said, passed down through generations like a virus of poverty thinking. You can break the chain. But first, you have to see the chain. You have to recognize that your current relationship with money is not something you chose. It's something you inherited, and you can choose differently. Stop trusting your feelings about money. Your emotions are terrible financial advisors. Terrible. Every major money mistake I've ever made came from following my feelings instead of following the data. When the market drops, fear screams at you to sell. Protect yourself. Get out before it gets worse. But the data shows that selling during drops locks in losses and misses the recovery. The data shows that staying invested through downturns leads to better long-term results. When a hot investment is rising fast, greed whispers that you should put more in. This is your chance. Everyone is getting rich. But the data shows that chasing hot investments usually means buying at the top right before the crash. Your feelings will betray you. Every time. What actually works is replacing emotion with evidence. Learning the historical returns of different asset classes. Understanding that diversified portfolios have survived every crisis in modern history. Knowing that time in the market beats timing the market in virtually every study ever conducted. I made myself a rule. No financial decision when emotional. If I'm feeling fear or greed or excitement about money, I wait. I do nothing until the feeling passes. Then I look at the data and make a decision based on evidence, not emotion. This rule has saved me from countless mistakes. The investments I almost panic sold recovered. The hot opportunities I almost chased crashed. My feelings would have destroyed me. The data protected me. Trust math. Don't trust feelings. This single shift will transform your financial outcomes. Stop saving without a plan. Here's something that surprises many people. Saving money is not enough. Having money sitting in accounts without a purpose is almost as bad as not having money at all. I see people who save diligently, but have no idea what the money is for. It just sits there. No plan, no purpose, no direction. They feel good because they're saving, but the money isn't working. It's just waiting. Waiting for a purpose that never gets defined. Money without direction is wasted potential. It's like having a powerful car but never driving it anywhere. The capability exists, but it's not being used. Here's what I learned that changed everything for me. Every dollar needs a job, not someday. Now, every single dollar you have should be assigned to a purpose. Some dollars are for emergencies. This is your emergency fund. 3 to 6 months of expenses, liquid, accessible. Its job is to protect you from unexpected disasters. Some dollars are for short-term goals, things you want to buy in the next 1 to 3 years. A car, a vacation, a down payment. These dollars need to be relatively safe because you'll need them soon. Some dollars are for long-term growth, retirement, financial freedom, wealth building. These dollars can take more risk because you won't need them for decades. These are the dollars that should be invested. When you give every dollar a job, something magical happens. You stop making random decisions. You stop wondering what to do with extra money. You have a system, and systems beat randomness every single time. Write down your goals, assign your money to those goals, review regularly, adjust as needed. This structure will accelerate your wealth building dramatically. Stop making financial decisions. Randomly connected to this is something that destroys wealth silently. Lack of structure. I see people who invest when they feel like it, save when they remember, make decisions based on whatever they saw in the news that day. This randomness kills wealth. Here's why. Wealth building works through consistency, not intensity. It's not about making one great decision. It's about making adequate decisions repeatedly over long periods. The strategy called dollar cost averaging demonstrates this perfectly. You invest the same amount at the same interval, regardless of what the market is doing. Sometimes you buy when prices are high, sometimes when prices are low. Over time, it averages out. This strategy beats trying to time the market for almost everyone. Not because it's sophisticated, because it removes decision-making, because it creates structure, because it makes consistency automatic. I invest on the same day every month. I don't check if the market is up or down. I don't wonder if I should wait. I just invest. This structure removed my ability to make emotional mistakes. It removed the temptation to time things perfectly. It made wealth building automatic. Discipline beats motivation. Structure beats intention. Systems beat willpower. Build the structure that makes good financial behavior automatic, and you won't need to rely on making good decisions in the moment. Stop surrounding yourself with financially ignorant people. Here's something nobody wants to hear. Your friends might be keeping you poor. Your environment might be your biggest obstacle. Think about the people you spend the most time with. Do they talk about investing? Do they discuss building wealth? Do they have financial goals they're working toward? For most people, the answer is no. Their friends talk about sports, entertainment, relationships, work complaints. Money rarely comes up, and when it does, it's usually complaining about not having enough, not strategizing about building more. This matters more than you think. You absorb the standards of your environment. If nobody around you invests, investing feels weird. If nobody around you talks about wealth building, you don't think about it. If everyone around you lives paycheck to paycheck, you normalize living paycheck to paycheck. I call this the money ceiling effect. Your environment creates an invisible ceiling on your financial aspirations. You might not even realize it's there, but it stops you from rising above the people around you. Here's the uncomfortable truth. If you want to build wealth and nobody in your life is building wealth, you need new inputs. Not necessarily new friends, but new influences. This could mean reading books by wealthy people, listening to podcasts about money, joining online communities focused on financial independence. Finding a mentor who has achieved what you want to achieve. I changed my inputs before I changed my outcomes. I started consuming content from people who had built wealth. I joined communities where financial discussions were normal. I found people who talked about investing the way my old friends talked about sports. Within a year, my thinking had shifted. Within 2 years, my behavior had shifted. Within 5 years, my results had shifted. The new environment raised my ceiling. Who are you surrounding yourself with? What standards are you absorbing? These questions matter more than you think. Stop being risk-averse. In the wrong way, most people think they're being smart by avoiding risk. They're not. They're taking the biggest risk of all, the risk of never building anything. Here's what they don't understand. Risk cannot be avoided. It can only be chosen. You're always taking some risk. The question is which risk you prefer. Risk number 1, You invest in the stock market. The market might go down. You might see your portfolio drop 20 or 30% during a bad year. This is the risk most people fear and try to avoid. Risk number 2, you keep everything in cash. Inflation erodes your purchasing power. You guarantee that your money will buy less over time. You guarantee that you won't build wealth. This risk is invisible but certain. Which risk is actually bigger? The stock market risk is scary but temporary. Markets recover. They always have. A 30% drop is painful but not permanent if you stay invested. The inflation risk is comfortable but permanent. The purchasing power you lose never comes back. The wealth you never build is gone forever. Most people choose the comfortable permanent loss over the uncomfortable temporary fluctuation. This choice makes them feel safe while making them poorer. I'm not saying put everything in stocks. I'm saying understand what risk actually means. Sometimes the safe choice is actually the most dangerous over time. Sometimes accepting short-term discomfort is the path to long-term security. Stop avoiding risk. Start choosing your risk wisely. Stop ignoring what your money could be doing. There's a concept that most people never think about, and it's costing them fortunes. It's called opportunity cost, the cost of what you didn't do with your money. When you keep $10,000 in a savings account earning 1%, the cost isn't just the 1% you earned. The cost is what that money could have earned elsewhere. If that same $10,000 could have earned 8% in a diversified investment portfolio, your opportunity cost is 7% per year. On $10,000, that's $700 the first year, but it compounds. Over 20 years, that $10,000 in savings becomes about $12,000. In investments, it becomes about $47,000. The difference, $35,000, is your opportunity cost. Money you never earned, wealth you never built, not because you made a bad decision, because you made no decision, because you let money sit idle while opportunities passed. Every dollar sitting idle has an opportunity cost. Every month you delay investing has an opportunity cost. Every year you spend thinking about it has an opportunity cost. The most expensive losses are the ones you don't see. The money you never made doesn't show up on any statement, but it's real. It's the life you could have had, the freedom you could have built, the security you could have created. Start seeing opportunity cost. Start feeling the weight of inaction. This awareness will motivate you to move. Stop optimizing for short-term comfort. Here's a pattern I see destroying financial futures everywhere. People optimize for comfort today at the expense of freedom tomorrow. They spend instead of invest because spending feels good now. They avoid the discomfort of budgeting because budgeting requires discipline. They choose the easy path because the hard path is hard. But here's what they don't realize. Short-term comfort creates long-term pain. Long-term thinking creates short-term discomfort, but long-term freedom. The person who sacrifices a little comfort now, who invests instead of spending, who delays gratification, who thinks in decades instead of days, that person ends up free. Free to work or not work. Free to choose opportunities. Free from financial stress. The person who optimizes for comfort now ends up trapped. Trapped in jobs they hate because they need the paycheck. Trapped by debt they accumulated. Trapped by the absence of options that wealth provides. I made a decision years ago. I chose long-term freedom over short-term comfort. This meant living below my means when I could have lived at my means. This meant investing money I could have spent. This meant delaying purchases that would have felt good in the moment. Was it uncomfortable? Sometimes. Was it worth it? Absolutely. The freedom I have now is worth every sacrifice. And the sacrifices don't even feel like sacrifices anymore. They feel like investments that paid off. Choose your future self over your present self. Choose freedom over comfort. Choose patience over hype. Stop refusing to admit your mistakes. Self-awareness is one of the most powerful wealth-building tools that exists. But most people refuse to use it. They make financial mistakes and blame external factors. The economy. Bad luck. Other people. They protect their ego by never admitting they were wrong. This protection kills growth. When you refuse to admit mistakes, you can't learn from them. When you can't learn from them, you repeat them. When you repeat them, you stay stuck. I've made countless financial mistakes. I've invested in things I shouldn't have. I've spent money I shouldn't have spent. I've trusted people I shouldn't have trusted. I've waited when I should have acted. I've acted when I should have waited. But here's the difference. I admitted every mistake. I analysed what went wrong. I extracted the lesson. I changed my behaviour. Every mistake became education. Every failure became fuel. Every loss became a lesson that prevented bigger future losses. Take complete ownership of your financial situation, not partial ownership, complete ownership. Even if external factors contributed, your choices brought you here, and your choices will take you somewhere else. This ownership is not about blame, it's about power. When you own the problem, you own the solution. When you blame others, you give away your power to change. Stop being financially illiterate. Knowledge about money compounds just like money itself. The more you learn, the better your decisions. The better your decisions, the better your outcomes. The better your outcomes, the more you have to invest in learning more. But most people know almost nothing about money. They don't understand how compound interest works. They don't know the difference between stocks and bonds. They can't explain what an index fund is. They've never calculated their net worth. They don't know their savings rate. This ignorance is expensive. Every financial product has people trying to take advantage of you. Salespeople pushing high-fee investments. Banks offering terrible interest rates. Credit card companies setting traps. If you don't understand how money works, these people will extract wealth from you your entire life. Education is protection. When you understand money, you can spot bad deals. You can avoid traps. You can make decisions that serve your interests instead of someone else's. I committed to financial education years ago. I read books. I watched videos. I joined communities. I asked questions. I made small experiments to test what I learned. This education has returned thousands of times its cost. Bad investments I avoided. Good opportunities I recognized. Fees I negotiated down. Rates I negotiated up. Knowledge compounds. You're watching this video, which means you're already learning. Don't stop here. Keep going. Make financial education a lifelong practice. The more you know, the more you grow. The real question: what will you do? I've told you what to stop doing. Now the question is, will you actually stop? Most people who watch videos like this feel motivated for a few hours, maybe a few days. Then they return to their old patterns. They keep chasing quick money, keep waiting to start, keep letting fear control them, keep inheriting bad beliefs, keep trusting emotions, keep saving without plans, keep making random decisions, keep surrounding themselves with the wrong people, keep avoiding the wrong risks, keep ignoring opportunity cost, keep optimizing for short-term comfort, keep refusing to admit mistakes, keep being financially illiterate. Nothing changes because nothing actually changes. Don't be most people. Take one thing from this video and implement it today, not tomorrow. Today. The person who takes small action beats the person who plans big action but never starts. Maybe you open an investment account today. Maybe you set up automatic monthly investing today. Maybe you calculate your net worth today. Maybe you identify one bad money belief today. Maybe you find one new financial influence today. Something, anything, action. Write in the comments what you're going to stop doing. Which of these patterns hit you hardest? Which one are you going to change first? Writing it down makes it real. Public commitment increases follow-through. Share this video with someone who needs to hear it. Someone who is making these mistakes without knowing it. Someone who deserves better financial outcomes. You might be the person who changes their trajectory forever with one shared link. The truth about getting rich. Let me leave you with the truth that underlies everything I've said today. Getting rich is not complicated. It's simple. So simple that people don't believe it and keep looking for something more sophisticated. Here's the formula. Spend less than you earn. Invest the difference consistently. Wait decades. That's it. That's the entire secret. The problem is not that people don't know this. The problem is that they don't do this. They get distracted by shortcuts. They get paralyzed by fear. They get misled by bad influences. They get trapped by bad beliefs. They get derailed by emotions. Everything I've talked about today is an obstacle to doing the simple thing. Remove the obstacles, do the simple thing, and you will build wealth. You will not get rich overnight. You will not find a shortcut that actually works. You will not beat the market consistently. You will not time things perfectly. But you can save consistently. You can invest automatically. You can educate yourself continuously. You can surround yourself with better influences. You can control your emotions. You can think long-term. You can take ownership of your outcomes. These things are in your control. These things are sufficient. These things, done consistently over time, will make you wealthy. Not Instagram wealthy, not crypto bro wealthy, actually wealthy. The kind of wealthy that means freedom. The kind of wealthy that means options. The kind of wealthy that means never worrying about money again. This is available to almost anyone, not through luck, not through genius, through stopping the behaviors that prevent it and starting the behaviors that create it. Stop the things I told you to stop. Start the things that actually work. Give it time. The results will come. They came for me. They've come for millions of others. They'll come for you if you let them. Stop sabotaging yourself. Start building your future. The choice is yours. But after this video, you can't say you didn't know. Now you know. What will you do with what you know?